Hello everyone, welcome back to the 9th of July midweek market updates on technical insights. This Wednesday morning, Asian markets opened on a cautious note with Hong Kong markets down about 1% as investors held back from chasing market all-time high after Donald Trump ruled out extending his 1st August tariff deadline. Trump said on a Truth social media post that there will be no change or extension on the raft of duties he announced on those nations, which include Japan and South Korea. The new tariff range from 25% to 40% and are set to begin on the 1st of August. The US president also announced a 50% levy on copper imports and hinted at further sector-specific tariffs will soon be announced and further threatened to impose up to 200% tariff on pharmaceutical imports into the US. All these tariff announcements reminded investors that we are not out of the woods. The US administration has not achieved their goals on trade issues, and there could still be continued volatility in the short term in the markets. This tariff intimidation continued to pose a threat to reignite inflation and further complicate when the US Fed will cut interest rates and risk derailing the US and global economy. Overnight on Wall Street, US stock closed mostly lower. The Dow Jones Industrial Average fell by 0.37% or 165 points to close at 44,240 points. Broad index S&P 500 is 0.07% or just 4 points to close at 6,225 points, while tech-heavy Nasdaq Composite Index was little change, adding just 0.03% or 6 points to end at 20,418 points, pairing earlier gains in the overnight trading session. In addition to monitoring further trade tariff developments, investors will also now be watching the release of the FOMC minutes tomorrow for clues on when the US Fed will cut interest rates. And next week, we'll kick off the earnings seasons with Citigroup, JP Morgan, Wells Fargo reporting their earnings on Tuesday, 15th of July. Back to Singapore, our SIAS index started the trading week really well. Despite the constant updates on the tariff developments, on Monday, our STI index was up about 18 points or 0.45%. On Tuesday, the rally continued with another 16-point gains or 0.4% added to the STI index to close at 4,047 points. This Wednesday morning, we are seeing another 8-point gains or 0.2% with the STI all-time high now standing at 4,064 points. Week to date, the STI is up about 45 points or 1.1%. On track for a third consecutive winning week. Year to date, we are up almost 7%, outperforming the US indices gains of about 4 to 6% so far this year. Top gainer on the STI on Tuesday was ST Engineering, up about 5% or 39 cents to $8.21. Top losers on Tuesday on the STI was Maple Logistics Trust, down 2.6% or 3 cents to $1.14. So for today's technical analysis, let's take a look at ST Engineering. This Wednesday morning, ST Engineering share price continued Tuesday 5% rally with a 0.7% or 6 cents gains to $8.27. For the trading week so far, ST Engineering is up about 6% or 46 cents. So will this rally continue? The previous time that we covered ST Engineering was about 1 month back on the 28th of May video, somewhere over this period. We identified that the previous support level was at the lower bound of the Bollinger Band over here at $7.15, and the 50 days moving average will likely provide further support around the $7.04. The previous resistance that we identified on the 28th of May was the psychological handle over here at the $8 handle. Fast forward to today, a month later, ST Engineering share price has broken above the $8 handle target after yesterday's 5% surge, and did not trigger our support level at the $7.15 level, which is at the lower bound of the Bollinger Band. The Bollinger Band has now converged further, with the lower bound of Bollinger Band now at $7.65 and the upper bound of the Bollinger Band now at $8.17. With the share price now above the upper bound of the Bollinger Band, this is an indication of a sell signal to wait for further retracement. First support level could be seen at the blue color line, which is the 50 days moving average now at $7.72, with the low bound of the Bollinger Band now at $7.65, creating a support zone around this price level. Looking at the indicators now, the MACD reading has turned positive this morning, indicating the start of a new uptrend for the mid to longer term. The RSI reading now at 67 points also suggests that the uptrend momentum that we see in the past 2 trading days is still strong, and the continuation of the uptrend will likely persist until we breach above the 70-point mark, which is the overbought zone on the RSI level. On the longer term, 15 analysts covering ST Engineering have 8 strong buy calls, 2 buy calls, 4 hold calls, and 1 sell call. The 12-month average target price among them is now at $8.27, which is the price of ST Engineering share price right now, with the maximum estimate at $9 and a minimum estimate at $6.60. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.